Heya Cryptozens, welcome back to the Crypto Overnighter. My name is Nikodemus and we do crypto news analysis nightly at 10 p.m. And keep in mind, none of this should be considered financial advice. And it's Thursday, March 2nd, 2023. And I'm going to let you in on a bit of a secret. Today's my birthday. And in years past, I would have been out on the bike for a few hours cruising around. This year, I chose to spend my day bringing you the news. So here we are. Polygon has released a decentralized identity solution that uses zero-knowledge proofs. Now, I tell you what, this is really exciting to me. In my work at the fiat mines, digital identity is one of the things I've worked on in the past, and likely will in the future. Now, these proofs allow users to verify their identity online without sharing sensitive information with a third party. Polygon announced the development of this service almost a year ago, and now it's available to the public. The goal of PolygonID is to address the problem of digital trust. The team behind Polygon believes that their new solution is going to solve the problem. Polygon highlighted the unique aspect of PolygonID that sets it apart from other decentralized ID frameworks. Their use of zero-knowledge technology allows users to verify their identities without revealing sensitive information. On March 1st, Polygon released 4 new tools as part of their PolygonID toolset. These new tools include Verifier SDK, Issuer Node, Wallet SDK, and Wallet App. Developers can use these tools to integrate decentralized identity into their applications. With PolygonID, users can generate zero-knowledge proofs using off-chain credentials like passports, national IDs, and degrees. These proofs allow users to interact with smart contracts and verify information on-chain. The use of off-chain data allows for trustless on-chain verifications in the verified credential format. This is part of that release on March 1st. According to Polygon, their ID tool is the first of its kind, because it lets users store their credentials on smartphones or some device like a smartphone. Additionally, users will no longer need passwords for login. Instead, they can use encrypted verifiable credentials that are exchanged by scanning a QR code or connecting to a desktop wallet. Polygon believes that this approach will result in improved security and a better user experience. And that's also going to free up a lot of system admin time. Now, David Schwartz is one of the co-founders at PolygonID. In a tweet on March 1st, he said that their product is based on the latest decentralized identity standards. This implementation is intended to protect developers and users from unauthorized access by third parties. Schwartz's tweet highlighted the importance of having strong security measures in place, and the use of the latest standards is one way to do this. Now, frankly, a user-friendly identity solution is going to be critical for widespread digital identity adoption. If it's difficult to use, if it doesn't inspire trust in the data, then people aren't going to want to use it. And that's going to be a big concern of theirs, because they're going to have to get this right. Because multiple projects have already pledged to integrate PolygonID. Kaleido, Fractal, and Collabland have all committed to using PolygonID. Now, these 3 projects have a combined user base of over 4 million people, according to Polygon. In addition, other Web3 projects, including The Sandbox and Guild XYZ, they're also integrating PolygonID. This news caused a 2.5% surge in the price of Polygon's native token. At the opening meeting of the Commodities Futures Trading Commission's Technology Advisory Committee on March 22nd, they will be discussing decentralized finance as the first topic. This shows that the cryptocurrency sector is a top priority for the regulator. Commissioner Christy Goldsmith Romero said that discussing DeFi's cyber vulnerabilities, decentralization indicators, digital identity, there it is again, unhosted wallets, those will all contribute to ongoing policy discussions in Washington, D.C. and beyond the Beltway. The CFTC has been paying more attention to the cryptocurrency sector because they want to regulate the non-securities crypto spot market. Commissioner Caroline Pham oversees another CFTC advisory committee, the Global Markets Advisory Committee. During the committee's initial meeting on February 13th, They discussed digital asset issues. FAM emphasized that crypto is borderless and policymakers need to understand international developments. On Thursday morning, the Reserve Bank of Australia shared that they have a group of projects to develop the EAUD, a digital dollar. This testing phase is currently happening, and the projects will explore various ways to use the digital dollar. Potential use cases include offline payments, bond settlements, and securities trading. According to RBA Assistant Governor Brad Jones, the pilot projects include a diverse group of industry representatives, everything from small fintechs to large institutions. Jones stated that the projects aim to provide hands-on learning for the industry and to increase policymakers' understanding of how a central bank digital currency could benefit the Australian financial system and their economy. The pilot projects will be conducted alongside a broader research study. The Reserve Bank plans to finish its CBDC pilot, which began in August of 2022, by mid-2023. Partners for the pilot projects include the Australia and New Zealand Banking Group Limited, MasterCard, the Australian Bond Exchange, DigiCash, Commonwealth Bank, and more. The projects will tackle different problems, such as enabling offline transactions with a CBDC, which is going to be the biggest problem for all of them. Whether it's a central bank digital currency or a private stablecoin, the ability to handle offline transactions is going to be crucial. But if they can't be first, just like we were talking about with the Polygon story, they also have to be really, really good right from the beginning. Because if CBDCs come out and they're crappy, well, look at what's happening in Nigeria right now. Nobody wants their CBDC, and the people are literally rioting over it. And the same is true for the stables too. Now, back to this project, it outlines a solution that involves smart cards with preloaded funds that can facilitate offline payments. However, this focus will be on a consumer-to-merchant situation. A separate project aims to examine using the USDC stablecoin to simplify foreign exchange trades and remittances. This project's objective is to test whether or not international remittances can be processed 24/7, 365 while lowering counterparty risk. But speaking of failed CBDC launches, and I'm happy to do so, China, of all places, just might be a little bit of light, a little bit of hope. Because media sources in China recently stated that the digital yuan hard wallet dispensers, now these were installed by the Shenzhen city officials last month. Well, apparently they've failed to attract many visitors from Hong Kong. Gosh, I wonder why. Authorities had planned to distribute 50,000 hard wallets between February 22nd and March 31st. However, only 625 Hong Kong residents have claimed their wallets to date. It seems like the machines have not met the expected demand. Authorities in the Lohu district collaborated with the Bank of China and Octopus Cards to set up digital currency hard wallet dispensers on February 18th. These dispensers allow Hong Kong visitors to obtain digital wallets by registering with their real name, Lo, and you wonder why people aren't lining up down the block. Then they can use funds to add to the wallet using their Octopus card. The hard wallets can be used at merchants and shops in the Luhao district, and users can receive a 20% consumption subsidy from the government, which 20% is pretty cheap price for your privacy, if you ask me. The news came just weeks after the city distributed almost $15 million US in their digital fiat to help stimulate the economy. And that was after the government's relaxation of its previous zero COVID policy restrictions. China took a similar approach in 2020 by distributing e-yuan to promote local consumption. China is a leader in the global central bank digital currency race. The digital yuan pilot is available in at least 26 cities and provinces across the country. Despite authorities' efforts, adoption still faces various obstacles, including competition from established payment services and limited use cases. In the previous month, the Bank of Japan declared that it would initiate a pilot program to experiment with digital yen use cases. Their plan is to join with other central banks worldwide in working on central bank digital currencies. Within the last year, countries such as India, Brazil, and Russia have also announced comparable CBDC initiatives. So far, there have been problems. and pro-crypto folks should be closely watching those problems. Builders and founders take note. Find out what these problems are and fix them before the central bank does. That's the only way to get enough momentum to hope to resist the imposition of a central bank digital currency. Because, make no mistake, they're going to impose one, and it will not be for our benefit, it's going to be for theirs. Gary Gensler disagrees with the notion that crypto exchanges are secure, qualified custodians for investment advisors. At an investor advisory committee meeting, Gensler discussed a proposed rule requiring investment advisors to utilize qualified custodians for asset storage. And this rule would include cryptocurrencies. Now, Gensler believes that this rule improves on current protection regulations and emphasizes that crypto exchanges should not be deemed secure under these guidelines. Now, if you listen to Gensler, he'll try to tell you that investment advisors cannot currently trust crypto trading and lending platforms to act as qualified custodians. He says that simply just because a crypto trading platform claims to be a qualified custodian, it does not guarantee their security. And I have to admit, he's not wrong. I mean, look at the last year if you need any more convincing that exchanges are not the safest custody option available. And listeners know I'm a huge fan of self-custody, but that's a different show. In reference to recent bankruptcies within the crypto industry, Gensler said that property belonging to customers on these platforms had become part of the bankruptcy estate. That's instead of being returned directly to the consumers. Now, Gensler also explained that the proposed rule is in line with a 2010 congressional provision for the SEC. They were told to broaden the custody rule to encompass all of an investor's assets, not just their securities or their funds. Now, this expansion was as a direct result of the financial crisis and Bernie Madoff's scams. Gensler believes that the enlarged custody rule would prevent advisors from misusing or losing investors' assets. Now, speaking of scams, during a court hearing on Thursday, U.S. bankruptcy judge Michael Wiles expressed doubts about the SEC's efforts to prevent Binance US from acquiring the assets of Voyager. And as we talked about the other night, the SEC has argued that the $1.02 billion purchase should be halted because Voyager's token may be considered an unregistered security. That's their argument. The judge found the SEC's objection to be strange, and he stated that Voyager was being asked to prove a negative without adequate guidance from the regulator. And he was shocked by the SEC's position and felt that it was unwarranted. And at that point, the judge speculated that the SEC's objection may have been made as a way to provide themselves with cover without actually doing anything. He was dissatisfied with the vague nature of their concerns and requested more specifics. William Upgrove represents the SEC, and he mentioned that creditors were not properly warned about regulatory risks. He did not firmly state whether or not VGX was a security. Which, here we go again. The SEC is apparently unwilling or unable to define something as a security. This time, it's not a reporter asking the question for a story. It's not an investor looking for guidance. It's not even a founder or a builder hoping the government doesn't demolish their project. It's a man with a gavel and a robe, and the SEC still won't give us an answer. Then again, this particular judge might not be the best person to do that to. We'll see. Now, according to counsel for Voyager, the purchase by Binance US could result in creditors receiving a 73% recovery rate. This is an improvement, which is due to the recent surge in the crypto market. The majority of customers, 97%, have voted in favor of the deal. Reportedly 97%. That accounts for 98% of their total claims. However, regulators have been less supportive. The SEC has expressed concerns about the sale of unregistered securities, while the Federal Trade Commission is investigating Voyager for deceptive marketing practices. Additionally, Texas regulators believe that creditors were not sufficiently informed about potential legal risks. Speaking of Binance, on Thursday, the Wall Street Journal reported that 3 U.S. senators, Elizabeth Warren, Chris Van Hollen, and Roger Marshall, wrote to Binance. They accused Binance of having illegal financial activity and requested information about its money laundering controls. Frankly, they called them a, quote, hotbed of illegal financial activity. This letter, addressed to CZ, was sent on Wednesday. Now, in addition to these accusations, the senators asked for details about the company's internal procedures, balance sheets, and any communications regarding alleged efforts to limit compliance. Binance, in response to the letter from the senators, said that it has always responded to queries from the jurisdictions in which it operates. However, the exchange did suggest that the accusations in the letter were false. A spokesperson for Binance said that there had been a lot of misinformation about the company and they look forward to correcting the record. The spokesperson also clarified that Binance.com, the parent, not Binance US, they don't operate or have customers in the US. Binance conducts its US-related business through its subsidiary, Binance US. The spokesperson stated that the company would provide information to the senators. Coinbase terminated its partnership with Silvergate Bank as its US dollar banking partner. The reason for this is an ongoing investigation that we've talked about before on this show, and Coinbase is apparently acting out of an abundance of caution. The exchange made this announcement through a tweet stating that it is no longer accepting or initiating payments to or from Silvergate. Instead, Coinbase has chosen Signature Bank as its other banking partner to handle institutional client cash transactions for its prime customers. As a result, Silvergate Bank's stocks have dropped 40% in pre-market trading. The bank was already under stress due to a delay in filing its annual 10K report, and this news has just added to the concerns. JP Morgan downgraded Silvergate Capital from neutral to underweight following the insolvency scare. In the US, a 10K report gives a comprehensive overview of a company's business and financial status. This is per the SEC's requirements. Silvergate announced that it would need an additional 2 weeks to finish the report for the 2022 fiscal year. However, this decision would not have an impact on payment instructions in pounds or euros. Now, Silvergate started experiencing problems when FTX collapsed, and frankly, I'm not terribly optimistic about their survival. Currently, the bank is under investigation by the U.S. Department of Justice for its involvement in the FTX downfall. That investigation is focusing on the account of one Sam Bankman-Fried. In addition, the bank and its CEO, Alan Lang, they're facing a civil lawsuit alleging that they aided and abetted a multi-billion-dollar fraudulent scheme by Sam and his friends at FTX and Alameda Research. Since Coinbase's announcement, Paxos, Circle, and Galaxy Digital, among others, have since announced similar actions. Galaxy Digital said that it had stopped accepting or initiating transfers to the bank on March 2nd as a precaution. Paxos posted on Twitter that it had already ceased all transfers and wires to Silvergate Exchange Network's account. However, the company would continue to process outgoing payments. Circle said that it was in the process of ending certain services with Silvergate. Due to the ongoing investigations and partnership's termination, Silvergate has become one of the most shorted stocks in the current market. By the end of January, over 72% of Silvergate Capital stock had been shorted. And that's going to do it for us tonight. I want to thank you, my listeners, because when you stop listening, I will stop talking. If you enjoyed tonight's show, then please like, follow, and subscribe. Leave a rating or review. And in the meantime, we'll see you tomorrow night.